Okay, good morning, everyone. You're most welcome to today's episode of the Market Snapshot. My name is Norbert Kiza, and I'm happy to be with you guys for the snapshot today. So, for today, we have quite a lot to go through. To first start it off, we have, of course, the FOMC that we're expecting later at 9 p.m. today. We are going to be getting insights into the rate decision by the FOMC. And then, of course, we will also be listening to Jerome Powell, who will be providing us some guidance on what the FOMC has decided regarding the rate cuts. Now, before we dive into the FOMC and what to expect from the FOMC, I'm first going to take us through the Bank of Japan statement that we had earlier today, and to see how that, of course, is likely to impact the JPY pairs. So today, the Bank of Japan decided to raise their benchmark rate by 15 basis points from 0.15% to 0.25%, a move that came as a surprise to the markets. And of course, we are seeing how the JPY pairs are now currently moving to the downside as a result from that decision that has been taken by the Bank of Japan. The USDJPY is currently down about 1.7% following this interest rate hike by the Bank of Japan. Looking into the statement that was released by the bank, we are seeing here that a change in guideline for money market operations and a decision on the plan for the reduction of the purchase amount for Japanese government bonds. So at the monetary policy statement held today, the policy board of the Bank of Japan decided by a 7-2 majority vote to set the following guideline for the money market operations for the intermeeting period. The bank will encourage the uncollateralized overnight call rate to remain at 0.25%. Regarding the reduction of the purchase amount, the bank decided by a unanimous vote to plan to reduce the amount of its monthly outright purchases of JBGs so that it will be about 3 trillion in January to March 2026. So essentially what we are seeing from the released statement by the Bank of Japan is that they seem to be providing a hawkish stance in this particular meeting, and the indications are pointing towards a likelihood of change of policy by the Bank of Japan to possibly go into aggressive rate hikes coming into 2026. Now, the other thing also to take away from the Bank of Japan conference is that we're also seeing a bit of divergence in terms of policy between the Bank of Japan and other central banks. The Federal Reserve has indicated that they are soon going to be looking into cutting rates. Bank of England has also indicated the same. And of course, even the ECB has also indicated the same, which is the central bank for the Eurozone. So all this is pointing towards the likelihood that now we are most likely going to get a much stronger shift towards, a stronger JPY currency. And we're already seeing, based on how price action has been from the previous weeks, that carry trade that has currently been causing a sell on the JPY pair seems to be taking much more precedent now, and we are seeing that there's likelihood for much more strength for the yen. Going further into the report, again, they're indicating here, they're also indicating that the consumer prices of cost increases led to the past rise in import prices have waned. Services prices have continued to rise moderately with a strengthening of moves to reflect wage increases in selling prices. Inflation expectations have risen moderately. Now, this again is an important thing. Previously, we've been seeing that the Bank of Japan had actually alluded to the fact that they wanted to keep rates on hold because they had not yet seen that pickup on inflation. But based on this statement, it seems that they are now possibly happy with how the inflation expectations are planning out. And it's also likely that they are getting their target for price stability, which of course is 2%, and which is a good thing. And we should see slightly more weakness there for the yen pairs going into, I think, the rest of the day. So that's it from the statement. To now quickly go to the economic calendar. To look into the economic calendar today, we have, of course, GDP for Canada, which is going to be coming out at 3:30. But the main focus for today, and of course for trading today for traders, is the FOMC conference, which of course is slated for 9:30 today. And of course, before that, we are going to be getting the FOMC statement. The calendar that I have on investing.com is actually missing the economic projections, but I think maybe it's likely going to be, they will have to modify it a bit to add the economic projections. Now, going into this conference, we are majorly going to be focusing on whether we are going to get comments on rate cuts. We'll also be looking towards the dot plot to see if the Fed is the members of the FOMC committee are possibly looking into more rate cuts. So the previous meeting we had, the Federal Reserve indicated that they are looking into cutting rates only once this year. That's in December. But now we are seeing that there's a likelihood that we might get a rate cut, more than one rate cut. First one being in September. Now, I know this is, of course, an unpopular opinion that the Fed is not likely to hike rates in July, but it's very, very likely that we could also get a surprise rate cut in this month of July. Now, what that will do to the market is that if indeed the Fed actually cuts rates today from the target range of 5.25, 5.5 to the target range of 5.5% to 5.25%, then we should see a very, very sharp sell on the dollar and possibly a sharp buy on things like the Dow Jones, the Nasdaq, Euro USD, GBPUSD, possibly will all point towards a sharp move to the upside. Now, looking also at the probabilities up here, I think it's clear to most of you that there's currently only a 3.1% chance that the Fed does not cut rates today, and there's a 96.9% chance that we get the Federal Reserve keeping rates on hold today. So we'll be looking out for that to see how that plans out. Now, crossing over to the earnings, we had a number of earnings coming out yesterday. Yesterday, we had earnings from Microsoft. We also had earnings from AMD. We saw that there was actually a very nice recovery on the Nasdaq yesterday, where we saw it actually recovering from about, it recovered from about a sharp sell. It was down, I think, about 400 points, recovered about 300 points of that sell. And today, the markets are going to be looking at Facebook or Meta Platforms. It's going to be releasing its earnings after the bell today at about midnight. And of course, if we get strong earnings here, I believe we are going to see a much stronger Nasdaq, possibly heading towards 20,000 and of course back to its high of 20,700. Now, we are also seeing a trend of discounting taking place on a number of big tech stocks like Nvidia. We've been seeing it getting a discount. Possibly all that is going to recover very, very nicely when it comes to the time for earnings. Now, looking at AMD, AMD released its earnings yesterday, and AMD surprised the markets because they actually had a very, very sharp push higher on their data center revenue, which of course contributed, which was a big contributing factor to its bottom line. You can see here that the AMD's revenue for the data center increased by 114%. That's a very, very sharp increase. And of course, that is the reason why AMD was up about 7% after after hours in the US session. It was actually up about 7%. Right now, it's actually about 9%. So this is the reason why we're having a sharp move higher on the Nasdaq. Now, before we go to the MT5 to look at the other pairs, I want us to review the DXY to see where the DXY currently stands and where we can expect the DXY to go to as we go into the FOMC conference today. Now, looking at the DXY here, what we can see or what stands out here is that the DXY has stayed relatively bearish. We're expecting to have a steady uptrend, which of course didn't materialize. And at the moment, it's just holding ground there. However, if you look at the DXY on the daily, we have held the support, the 6-month support from March. We've been holding that level very, very nicely. We had a bit of a fake out below this support level. And of course, we saw that soon after we broke below there, we saw a very nice sharp recovery back to this level here. Now, if we get any kinds of hints from Powell that we are going to have a rate cut in September, we should see the DXY selling below this level and possibly coming now back to this level of 103. We are also, for those of you that might not be aware, we are also in the second half of the year, which of course is then closer to the US elections that we're going to be having in November. If the Fed starts cutting rates, which of course it will soon enough, we're going to get a relatively bearish DXY or the dollar index that could start taking us all the way back to these levels that were at the start of the year, all the way down to these levels of 102 and even lower. Now, let's cross over to the MT5 to look at the charts. Now, on the MT5, we are going to begin by looking at BTCUSD. And then, of course, right after that, we shall then move over to the other key assets that are most likely to react to some movements today. So looking at BTCUSD, this is what we can see. All right, so for BTCUSD, we are stuck in a very, very tight range here. All right, so this is where we are on BTC. We are stuck in a very tight range here on BTC. So from March, we entered this consolidation here, and as you can see here on the H4 time frame, we are still stuck in this consolidation. Soon enough, we are going to get a push all the way above 70,000. That should then take us higher towards 80,000. But for now, we are still stuck in this range. Now, regarding the fundamental side of things, on the fundamentals, we saw recently that the US government moved about 29,000 Bitcoin from the Bitcoin that was confiscated from the Silk Road crackdown by the FBI. And of course, the last time we saw government selling Bitcoin, which was Germany, it had a very, very big impact on the price. Of course, these prices here. So if the US government starts selling some of that Bitcoin in the open market, I believe it's going to put price pressures on BTC. where we could see it possibly trending lower. But for now, I would say we are still mostly bullish, and we should see the market possibly moving to the upside. Now, crossing over to the Dow Jones. Lucy, you're saying, Lucy, I think you need to check on your volume. My volume is perfectly fine. I can confirm that. So check. I think the issue might be on your end. All right. So we can just quickly move to the Dow Jones to see how the movement is on the Dow Jones. Give me a moment. Okay, so my MT5 is giving me a few issues, so maybe we can use let's use the trading view. Okay, so let me just go through a couple of things here. So I guess I'll start with GBPUSD. So for GBPUSD, this is what we can expect for today. So this, of course, is a trade that we provided, I believe, last week on GBPUSD. Played out quite nicely. These are the key levels for us to watch. If you look at GBPUSD on a 4-hour time frame, we have certain levels where price it could possibly hold. Now, from the previous FOMC conference, okay, every other FOMC conference we've been having, it's actually been bullish for the GBPUSD. Every single time we have the rate decision, we normally get a sharp move to the upside before Powell comes and speaks, and then the market eventually reverses and moves lower. Now, for GBPUSD, my key level is going to be my key levels of demand are where you can see we have that level of 1.29211, and then of course you also have 1.29026. Currently, we have been able to hold price action at this area here, and of course the previous key demand zone for GBPUSD has been this zone here. where we have had price holding above 1.27, and of course around that level of 1.27900. Now I'm expecting that today when we get the rate decision, we should see a potential move to the upside for GBPUSD back to this level of demand. And of course, this will then, whether it holds here, is going to be now a story for another day. I'm not too sure whether we hold price action at this level, but it's very, very likely that we have a reversal back here. And then, of course, from here, we'll then have maybe GBPUSD then reversing to sell down. Now, I also know that tomorrow we have a Bank of England conference. The Bank of England conference is going to be very, very important for where GBPUSD eventually goes. If the Bank of England cuts rates tomorrow, we are without a doubt going to get into this demand zone. And of course, if Powell is a bit hawkish today, and if he mentions anything about maybe delaying the rate cut, or possibly indicating that the US economy is strong, there's nothing that maybe warrants for them to act quickly. You know, if his guidance is mostly more hawkish than dovish, it's really going to provide us a likelihood that GBPUSD reverses, and of course we should see price getting back lower into that particular demand zone. Now, crossing over to Euro USD, Euro USD again also provided good trading opportunities. We had a very, very nice risk reward for GBPUSD from sometime last week. Now, looking at where it could eventually continue to, right now we have been able to come and get into this demand zone that I marked from the 5th of July, and currently price action is holding along those levels there. Now I'm expecting in our FOMC conference at 9, we're likely going to get a move to the upside, possibly coming to fill this imbalance zone here that we had from earlier. If we get a move to the upside, I believe Euro USD will possibly hold price action at these levels before it then turns lower. But for now, this is what I'm expecting at 9 p.m. Now, the next levels for demand for Euro USD, if we take this level here and possibly sell below it, the next level for us to get to is going to be somewhere around here. That's at 1.0226, 1.03335. Okay. Keep in mind, guys, that the swing trade for Euro USD began from this level, and it has taken Euro USD all the way back here. So we are now currently in a downtrend swing that is now holding along these points here. So if we break below here, the next movement is going to be back to this level of demand. And this is where now we shall then get new sellers coming in. Now, crossing over to gold. Now, gold yesterday had a sharp buy. The sharp buy on gold was as a result of the tensions that are currently building with Israel and Hezbollah. Yesterday, Israel launched a targeted attack in Beirut, which is, I believe, Lebanon, and one of the Hezbollah chiefs was actually killed, and that's the reason why we actually saw gold buying up to this level. If you guys were trading yesterday, you must have noticed how gold bought up to these levels. The reason for that was because of those attacks. Now, for gold, I'm also bullish on gold going into the FOMC conference. I'm expecting that we get a nice spike up on gold, possibly from this area here. We should see a spike upwards to this zone of 2,430, which of course will then invite sellers that will then possibly reverse and trade lower. But for now, this is what we're expecting. We should see some potential bullish momentum there for gold back to this level there. Now, let's look at USDJPY. For USDJPY, this is what we have for USDJPY. The market had a very, very sharp sell today following the Bank of Japan conference. And as things are looking at the moment, it seems we're having more bearishness on JPY than bullishness. The reason for this is because the Bank of Japan is now looking extremely aggressive with rate cuts, and we could potentially see more weakness coming in for the JPY pairs, possibly selling towards certain levels. I marked my levels of demand on USDJPY, where I was expecting us to keep getting some buying momentum, but as you can see, instead of us buying above those levels, we didn't get that much of bullish momentum. And you can see now how strong uh, or how weak the JPY pairs are looking. Now, if indeed Bank of Japan is going to start cutting rates aggressively, then I believe we are most likely going to have more bearish outlook for the JPY pairs, and we should see more selling momentum coming in, possibly to see us having the JPY selling towards these zones over the course of the next few days. Now, the other thing is also the carry trade. Okay, there's currently a carry trade on the JPY pairs, which I believe is going to start getting unwound. Okay, keep in mind, guys, that the swing buy for the JPY began around here, and it has been moving all the way up to this level here. So you can see we are now currently reversing that carry trade. If anything, we need to monitor and see just how strong that trade plays out. Now, crossing over to the indices, okay, so for the indices, I believe we can move over to the MT5. So for the indices, I'm going to start with US 30. So for the US 30, if you guys recall, we had mentioned that there was some hesitation. There was some hesitation at certain levels for this particular uh, for this particular index. You can see we had some hesitation to sell below certain levels. So those levels were 40,488, 40,360, 40,217. So my key area that I had really been looking out for was here. But as you can see, we first reversed back down. We saw a lot of demand coming into this area here, and then we saw some bullish momentum. Now, at the moment, it's a no-brainer that Dow Jones is looking quite bullish. And the reason for that is actually because traders are anticipating potential dovish pause from the Fed, which in turn could enable us to see a stronger Dow Jones above towards 40,000, 41,000. So at the moment, I would say I maintain a bullish outlook here for the Dow Jones, and I'm expecting us to possibly add some more strength towards this area. We might come into this area of 41,000 into possibly during the FOMC conference, where we could see it possibly moving into that area there. Now, whether we break this area and move higher is really going to depend on how the markets digest the FOMC statement. It's again very, very likely that the markets will digest the statement as dovish. If Powell reemphasizes how the Fed is patient to cut rates or does not really see the urgency to cut rates, I believe the market could reverse from those levels, and we could see the market trading lower into after hours and possibly into tomorrow's Asia session. Now, looking at the Nasdaq yesterday recovered very sharply on the back of strong earnings from AMD. Currently, the Nasdaq is looking quite bullish. Again, we're able to grab the Nasdaq from this level. It was a really, really good trade around 18,600, and we held it all the way up to here. And I believe we are not complaining. And I believe if we see the Nasdaq holding this demand zone, we have the Meta earnings today. If the Meta earnings come out bullish today, rather if they come out strong and if we see good strong forward guidance, then I believe we are going to see some nice recovery that could allow the Nasdaq to recover back to that level of 19,500. So so now I believe it's time for questions. If you have any questions, now may be the time for you to send through your questions, and I'll be happy to go through them. Okay. Someone is saying kindly check on silver. Okay, so for silver, I don't have silver up on my MT5, so I'm going to have to go over it for you on I'll have to go over it for you on TradingView. So silver is momentum, and it's okay. Silver is currently at a demand base, if I'm to call it that. For those of you that know supply and demand, we have what we call impulsive moves, we have demand bases, and then of course we have invalidations. So we had an invalidation or a failure to break below certain levels for silver, where on the higher time frames it seems more like silver has created some kind of a base. Okay, I'm looking towards a potential move higher for silver, possibly towards this level of $30 an ounce. Keep in mind, silver does not react as much as gold. If you're trading gold, we don't really get that much of a bullish momentum. We don't really get that much of a fast or quick movement on silver, but we should see it possibly recovering to possibly move higher going into the FOMC conference. So I hope that helps. Next question. Yeah, so for the Nasdaq, maybe to take you back a bit, like I've indicated, we have meta earnings today, and where the Nasdaq moves today is really going to depend on the meta earnings. But I would say that the Nasdaq is looking quite bullish, and of course, AMD posted strong earnings yesterday. They had an increase on their data center revenue. It increased by 114%, and this contributed to an increase on their bottom line. So that, of course, is the reason why we are seeing a strong Nasdaq. So it's moving higher, mostly because of the AMD. So I hope that helps. Next. Yes, whenever you have a golden cross, it's always a bullish sign. Okay, a golden cross is a bullish sign. So if you say a golden cross on a 1 hour, it means that gold is starting a bullish trend and would possibly move higher. I hope that helps, Mike. Next. What's your bias for gold? Again, guys, like I've mentioned, I'm just from gold. I indicated to you, gold is having a bullish bias at the moment. And of course, this is because of what's going on with Israel and Hezbollah. Plus also, if we get a dovish pause on rate, on the target range of the federal funds rate by the Fed, then I believe gold is going to have a sharp reaction to the upside before retracing. Awesome. Where can I keep up with earnings and on which website? So for earnings, you can just check investing.com. So when you go to investing.com, you can just quickly go to the section where they have the earnings calendar. And where there you will be able to see the EPS, and also you'll also be able to see the revenue. If you click on any of those, they will now open a new page where then you will be able to look at the financials, Again, though, for more deeper analysis, I would expect you possibly to use Yahoo Finance so that you can get an even deeper look into all of those revenue contributors. Awesome. Any other question? So for S&P 500, I don't really have any recent analysis on it, but it's actually been on a technical pullback from its highs, and I believe that pullback is currently what's happening on it. However, any movements for S&P 500 are majorly going to depend on Apple earnings tomorrow, and possibly also the earnings we get from Nvidia as well, which I think are due to be released. I think sometime around the 5th or 6th of this month. Yeah, so just keep an eye out for those two earnings because those are going to really affect where the S&P 500 goes to. The chart for the day. Chart for the day now, which one? I really can't point out any chart per se, but I would say maybe you might want to keep an eye on gold. Gold possibly has some chances for it to move higher. So keep an eye on gold for it to possibly move higher. Awesome. For what is happening between Israel and Hamas, I honestly cannot guide you on that one. You can use many sites. Possibly you can use possibly you can use CNN. You can also use Bloomberg. All those can be able to provide you some. They can. Okay, on the Russell 2000, I honestly haven't really looked at it of late, but it's looking quite bullish. Currently, it's forming an ascending triangle, which of course indicates that we should see a potential move to the upside. We've been seeing a bit of rotation currently in the US, where we are seeing that hedge funds and asset managers are cutting back on the mega caps, and they are now rotating into the small caps. And of course, for those of you that may not be aware, the Russell 2000 is the small cap index for the US. So the moves higher that we are seeing are mostly because of that rotation. So we should potentially see some more bullish momentum there going into the rest of the session. Awesome. So that's it from me, guys. Thank you so much. That's it from me, guys. Thank you so much for joining me for today's market snapshot. I really wish you all the very best for today's FOMC conference. Remember to manage risk well, and let's meet again on Friday, guys. Cheers and happy trading, everyone.